Hey, what's up guys? John here. Wells Fargo just lost a $3.7 billion lawsuit brought under the Consumer Financial Protection Bureau, the CFPB. And what this bureau does is they really protect the consumer. They go after big banks, lending institutions. They even go after TransUnion, Equifax, Experian. They make sure the consumer is protected. And Wells Fargo was just found guilty of completing billions of dollars in illicit activity. And so why we all need to pay very close attention to this is because I personally believe that this situation with Wells Fargo is just a drop in the bucket to how big this problem really is. And I think that this problem likely spans between many banks, many lending institutions, potentially yours. And so if you have a credit card, an auto loan, a mortgage, you should pay very, very close attention to every single dollar that's going out and every dollar that's going in to make sure that everything adds up. Because I personally think that there's a lot happening behind the scenes that people should, really pay close attention to. And if they did, it would probably save them hundreds or thousands of dollars per year that they could be investing into their future. Please hit the like button. When you hit the like button, YouTube is going to share this content to educate more people about what's really going on. If you need to fix your credit, we'd love to help you. I'll give you a free consultation to see if we could help you at GreatCreditFast.com. That's GreatCreditFast.com. You can give us a call at 561-430-5900. We'd love to speak with you. Take a look at this. Wells Fargo agrees to a $3.7 billion settlement with CFPB over consumer abuses. Wells Fargo agreed to a $3.7 billion settlement with the CFPB over customer abuses tied to checking accounts, mortgages, and auto loans, with some of the misconduct happening as recently as this year. The company was ordered to pay $1.7 billion in a civil penalty and more than $2 billion to customers with 16 million accounts. 16 million accounts. So you take that in consideration. America, we have a population of 330 million. You have 228 million people over the age of 18, right? And so you're looking at 16 million accounts. I mean, that is a very large percentage of that 228 million, right? The CFPB said the statement, the San Francisco-based bank said in a statement that the many required actions tied to settlements were already completed. The bank's illegal conduct led to billions of dollars in financial harm to its customers, and for thousands of customers, the loss of their vehicles and homes. The agency said in a release, consumers were illegally assessed fees and interest charges on auto and mortgage loans, and had cars wrongfully repossessed and had payments to auto and mortgage loans misapplied by the bank. See, this is why I believe it is so important to have excellent credit. Because when you have excellent credit, you're going to borrow money for less money. You're going to borrow money for less interest, and you're going to position yourself to not be taken advantage of because you're going to have more loan offers. You're going to have many banks wanting to lend money to you, whether it be on an automobile, a house, whatever it may be. For example, I just filmed a video today on Instagram that I'm going to be releasing soon, talking about the difference between good credit and bad credit on an auto loan. If you were to borrow $30,000 with excellent credit over 60 months, over 5 years, it would cost you roughly $2,975 per that term. So 5 years, right? That's not bad. Roughly $3,000, not that bad over 5 years. However, if you have bad credit, it's $15,100. The difference is over $202 per month, right? And I personally believe that that is if there's no foul play, if there's no problems happening behind the scenes, there's no misappropriated fees, $200+ plus per month. That's a lot. That could pay for a cell phone bill and your gas just for that month, right? So when you have great credit, you position yourself accordingly. The scope of wrongdoing detailed, the CFPB shows that Wells Fargo had problems servicing customers well beyond its 2016 scandal, involving millions of fake accounts. Unlike rivals, JP Morgan and Bank of America, Wells Fargo, the fourth biggest U.S. bank by assets, had the relatively small Wall Street business, meaning the ordinary Americans are bread and butter customers. The ordinary Americans, the average American has a credit score of 698. And so because of that, those consumers, they're not the A+ consumer that has all these lending options with a bunch of money in the bank and strong financials. They're going after the ones that live in paycheck to paycheck. They can bring them in and they can do apparently what they do, right? Some of those issues continued until recently. From at least 2011 through 2022, the bank misapplied auto loan payments, made other mistakes, some of which led to improper auto repossessions according to consumer order. And from 2011 to 2018, the bank made errors in mortgage modification applications. The resolution lifts one overhang from Wells Fargo, which has been led by the CEO since 2019 in October. Last year, the bank told investors that it was likely to experience issue or delays. Dissatisfying demand from its multiple U.S. regulators. Then in October, the bank set aside $2 billion for legal and regulatory customer remodification matters, igniting speculation that the settlement was nearing. But other regulatory hurdles remain. Wells Fargo is still operating under consent orders tied to its 2016 fake account scandal, including one from the Federal Reserve that caps its asset growth. Furthermore, the bank said fourth quarter expenses would include a $3.5 billion operating loss, or $2.8 billion after taxes, from incremental costs from the CFPB's civil penalty and consumer remodification efforts, as well as other legal matters. The bank is still expected to post an overall profit when it reports in mid-January, according to the person with knowledge to the matter. The fourth largest quarter expense indicates that Wells Fargo is setting aside funds for future settlements. Jefferies analyst Ken Usdin said Tuesday in a note, while we do not see today's actions as having a direct read through to an asset cap, it is potential removal. We would take today's announcement as a sign of positive progress on moving towards the ultimate goal, right? This to me is very fascinating, how fast things can really escalate with a bank. When you have a situation like Wells Fargo, many people just kind of, took it in and then, in one ear out the other, they moved on. But when you have a business or a bank that has a history of having bad practice, you really have to be careful with putting your money in these institutions because you just don't know how sound they really are. When they're talking about massive operating losses and they're running their business unethically, we have to ask ourselves, could it just be them? Could it be other banks? Where is your money tied, right? What other problems could there really be behind the scenes? As part of the settlement, Wells Fargo has had to refund improper fees. When this actually happened to me recently, I had a situation in which I bought my wife a Tesla and I paid the insurance, the car got totaled, and they pulled $428 from my account every single month for a year and I didn't notice. And then I called the bank, or I called the insurance company, Farmers Insurance. I called them and said, you guys took $428 a month from me for the last 12 months. I'm noticing this now. They refunded me nearly $5,000. And they basically got a 0% interest loan, right? So I basically just gave them all the money. They used the money, and then they gave it back to me in a check, right? So you really have to pay close attention. That's why I'm not just saying, Wells Fargo. I'm saying everyone. You really have to pay close attention to your accounts because you'd be surprised by how many bogus fees, how many charges, illicit charges are happening behind the scenes that no one's really talking about. And provide compensation for bad foreclosures, illegal repossessed cars, frozen bank accounts. The CFPB said most of the funds, $1.3 billion, will go to auto borrowers. The agency said the bank will also have to stop hitting consumers with surprise overdraft fees, refund auto borrowers on unused portions of their insurance products. You have to also take into consideration, what does this do when you have a repossession on your account? It really impacts your credit score negatively. Same thing with a foreclosure, right? They're not just taking money. They're really crippling the everyday consumer when they start to, move forward on some of these illicit activities. We saw this in 2007, 2008 with a lot of people losing their homes due to predatory loans that were happening. They might have lost in the short term and they won later, but over the long term it really held them back because of that repossession, foreclosure, that problem that occurred on their credit report. We and our regulators have identified a series of unacceptable practices that we have been working systematically to change and provide customer remediation where warranted, Sheriff said in a statement. The far-reaching agreement is an important milestone in our work to transform operating practices of Wells Fargo and to put the issues behind us. Although the company said it was pleased to bring closure to its banking, auto, and mortgage issues found by the agency, the CFPB director, Rohit Chopra, said it made clear that it did not consider Wells Fargo off the hook. The agreement doesn't provide immunity to Wells Fargo employees or release claims for ongoing practices. While today's order addresses a number of consumer abuses, it should not read as a sign that Wells Fargo has moved past its long-standing problems or that the CFPB's work here is done. The CFPB's head said that the regulators should consider whether limitations beyond the Fed's asset cap and mortgage services restrictions needed to be imposed on the bank. The $1.7 billion fine assessed on Wells Fargo was the largest in the agency's history, according to the senior official. In the CFPB's 11 years of existence, Wells Fargo has consistently been one of the most problematic repeat offenders of the banks and credit unions we supervise. Pay attention to your credit reports. Pay attention to your bank accounts. Watch it all. If you need help fixing your credit, if you have any problems holding you back, we would love to give you a free consultation at GreatCreditFast.com. You can schedule quickly. GreatCreditFast.com, or give us a call now at 561-430-5900. Subscribe here and subscribe to my second channel. It's an interactive call-in show and a podcast. And LinkedIn, Twitter, Instagram, and TikTok up in the banner. Catch you guys in the next video.